Hey, what is up guys? It's Chris with Crypto Profit again. In today's lesson, we're going to be learning about the MACD signal and Confluence and how you can use them together both as a signal so that you can go ahead and place good trades and also as confirmation to an overall direction of the trend. So let's just gonna go ahead and hop right into it. So let's start off by talking about this right here. This right here is the MACD signal. And the way the MACD signal works is that we create confluence. So when the two lines intersect and switch spots, which is what confluence means, this would be what you would place a sell order because you think that the market is going to drop, and then you place a sell order here, and once they intersected, you pull out. If they did the exact opposite and they intercross here and they created confluence, then that meant that you would place a buy order because you think that the market is going to go up. So these two lines right here are not actually the MACD lines. They're actually the moving averages. So this right here is going to be our 20-day moving average, and this right here is going to be our 10-day moving average. And I have them color-coded the exact same way as the MACD signals. That way I can just look at them, and then I could see if it matches both my MACD signals and my moving averages. And together, I see whether this is a good buy signal or a bad one. So let's go ahead and look at an example of a good signal and a bad one, and why it's important for you guys to look at the picture as a whole and understand what it's going. Because remember, these are just tools so that you can make a more informed decision so that you can do a better job. Use them as confirmation, not automation. Anyways, as we see here, it dropped, and then our MACD signal is telling us that it was going to go down. So if you placed a sell order here, it went down, you would have made a hefty profit. But as we see here, the market was just capitulating, right? So we were just going sideways, and it hadn't made its decision whether it wanted to go up or it wanted to go down. And if you would have placed a buy order here, it would have dropped and you would have lost. So the way we notice whether it's a good or bad signal, notice how the moving averages are the exact same as the MACD signal, telling us that, hey, you know what, that is a good signal. And then when we were here, the MACD signal created confluence again, and then it was telling us that we were going to drop. And as we see, it actually did drop, and it's starting to do the exact same thing, so we know to ignore this one. So this right here is called a histogram, and it's just basically a fancy word for a visual representation. These two things are the exact same thing, so one of them might just work better for you, but you could use either or, but they're the exact same. Basically what it means, when these two lines intersect, it's telling us that we're going down, or if the histogram is in the red, that's telling us that it is a sell signal. When it switches over and it's green, that's a buy signal because you think that the market's going to go up. Same thing with the lines right here. So now that you know the difference between a good signal and a bad one, let's look at multiple time frames. That way you can see why it's important for you to use this in combination with other tools. So when we go over for the 4-hour, right, the MACD signal wasn't until here, and it's telling you to sell around this area. But we know from the moving averages that, hey, this area right here, that's a good time to go ahead and place a sell order. The MACD signal is still indicating that it's going to drop. Plus, we have a falling wedge shape from our technical analysis telling us that it's going to go down. So now you have 3 different confirmations that, you know what, this right here is a good sell order, because you have both your technical analysis from the shape, the moving averages, and the MACD signal. That's the way you want to do it. You need to know the overall direction of the trend, and then you want to use multiple indicators and your own technical analysis as confirmation whether it's a good idea to go ahead and place a buy order or a sell order. So let's just go ahead and look at the weekly, right? The histogram basically looks around the same, and it serves the same purpose. So you can use it at any time period, but you need to understand what's happening both in the long term in this area right here and on the shorter terms for the 4-hour, right? Let's go ahead and look at an example of a good buy order because I want you guys to see what it looks like. So here, right, we had our moving averages create confluence and intersect and switch spots. So now we have this line above that one, and then when we look, we have our 10-day above our 20-day, and what happened? It went up, this would have been a good buy signal from the MACD. So that's enough for today. As always, remember to use everything together and to do your own technical analysis and to trade responsibly. Use proper risk management, and thank you for watching.